everyone, and welcome to Thoughts on Investing. Wow, what a week. We just lived through one of the most dramatic periods for the market in a long time. Stocks got absolutely rocked by everything from trade policy shakeups to tech jitters, and then a massive geopolitical shockwave hit the Middle East. So in this explainer, we're going to break it all down, what happened, and more importantly, what it all means.
All right, before we dive in, just the usual quick reminder, this is all for educational purposes. It is not financial advice. You know, markets can be wild and unpredictable, so please always do your own research.
Okay, so here's how we're going to tackle this. We've got 4 parts. First, we'll look at the anxiety that was already brewing on Wall Street. Then, we'll get into that geopolitical shockwave that, well, it changed everything. After that, we'll trace the ripple effects around the globe, and we'll wrap it all up with the big takeaway from all this chaos. So let's set the scene. Even before the huge international story broke, this week was already starting with a whole lot of tension. Investors right here in the US were, well, they were on edge. Confidence was looking pretty shaky, and it was all thanks to a few key headwinds hitting us at home.
And really, it was kind of like a perfect storm of 3 different issues. First up, you had President Trump's new tariff policy, which just threw a ton of uncertainty into the markets. Nobody really knew who was going to win or lose. At the exact same time, you had these nagging fears about AI, plus some not-so-great inflation data, and that just hammered the tech sector. And if that wasn't enough, the banking sector took a massive hit. We're talking big names like Goldman Sachs and Wells Fargo having their worst day in months. So yeah, the Dow, the S&P 500, the NASDAQ, they all felt the heat.
So, what happens when you have all that uncertainty swirling around? Well, investors did exactly what you'd expect. They flipped into what we call risk-off mode. It's a pretty simple idea, right? When the future looks this cloudy, you start selling off your riskier stuff, like stocks, and you move that money into assets that feel safer, like government bonds. It's the classic flight to safety.
But here's the thing. Just as everyone was busy wrestling with tariffs and tech stocks, the entire global landscape was about to get completely redrawn. And it was all because of one single seismic event.
And that event, of course, was a massive geopolitical shockwave that came roaring out of the Middle East. This story didn't just get attention, it completely overshadowed everything else and sent ripples through literally every corner of the global market. And it all unfolded so fast. First, you had these reports trickling in. A major military campaign hitting Iran. Then, the confirmation came, and it was stunning. Iran's supreme leader, Ayatollah Ali Khamenei, was dead. The market's reaction was just immediate. The number one fear? That the global oil supply chain, especially through the Strait of Hormuz, was about to be massively disrupted. And just like that, crude prices absolutely soared. And how high are we talking? Well, analysts immediately started cranking up their forecasts. The big number everyone started throwing around was $100 a barrel. And you could just feel the fear in the market with warnings that, hey, prices could easily climb another 10, maybe even $20 on top of that if things got any worse. But this was about so much more than just oil. This shockwave created this incredibly complex and, honestly, fascinating ripple effect that spread across all of the world's financial markets. And what you see here is a real tale of 2 markets. Over in the US, all this extra geopolitical stress just piled on, pushing the already nervous indexes like the S&P 500 and the Dow to finish the week in the red. But then you look across the pond to the UK, and it's a completely different story. The FTSE 100 actually hit a record high. It was driven up by mining and defensive stocks, exactly the kind of stuff investors run to when there's this much uncertainty in the air. This split also kind of poured gasoline on a trend that was already starting to happen. We saw some U.S. investors begin to pull their capital out of domestic stocks and start looking overseas for better returns. With the whole AI stock boom cooling off a little, that money started to flow more towards markets in Asia and Europe. It's a subtle shift, but a really important one in the grand scheme of things. And really, the reaction was different everywhere you looked. In the Middle East itself, stock markets in the Gulf just slid sharply. Kuwait's exchange even had to halt trading altogether. And as you'd probably guess, the traditional safe havens, gold and the US dollar, they both rallied. But the crypto market, whoa, it was a wild ride. Bitcoin plunged at first on the conflict fears, but then it rebounded like crazy once the news was confirmed. It just goes to show you how incredibly volatile and reactive that whole asset class is. Okay, so after a week that gave us all whiplash, what's the big picture here?
Let's try to make some sense of all this chaos and just boil it down to what really matters.
When you look back, this week was really defined by a collision of two huge forces. On one side, you had all those domestic worries, tariffs, tech, that were already dragging on U.S. markets. And then, on the other, you had this geopolitical bomb from the Middle East that just completely rewrote the rules for oil and global stocks. It created enormous risk, for sure, but also these strange little pockets of opportunity, just like we saw over in the UK.
And all of this leaves us with a really big question to chew on. In a world where one single event can literally change everything overnight, and where different markets can react in completely opposite ways, what does it truly mean to be a diversified investor today?
Well, there you have it. If you found this breakdown of a truly historic week helpful, do me a favor and hit that like button. And of course, subscribe for more explainers on the events that are shaping our markets. Thanks for watching.